Well, first of all, welcome, Marcos and Bell to the Latitude podcast. It's a pleasure to have you on.
Thanks, Brian. Great to be here.
Thanks for inviting us. It's amazing to have you as an investor, early investor in our fund when we started, and also an invested company currently. So
it's pretty incredible to think back to those early days. When I joined that kind of small group of LPs, of operators and founders, and then kind of look where we are today. Definitely, the ecosystem has changed a whole lot since you kicked off Canary, and so I'm excited to dive in with you guys today. And talk a little bit more about your perspective on the market, and share a little bit more insight from Canary. So thanks. Let's start with you, Marcos. You've worked in hedge funds and global investment sectors before Canary. When and why did you take an interest in startups and venture capital? Talk a little bit more about those initial connections with Florian, Mate, and and give us a little scoop on the early days and kind of how that all came together.
Sure. When I started my career, I always wanted to have my own business, to start something from the ground up. But for me, back in those days, early 2000s, basically starting a company was basically start a fund. That was what I, was taught. And so that's when I was working in the financial markets at JP Morgan, actually. And then I met the founding partner of M Square, who I joined to start a company, which is the hedge fund you mentioned. And I stayed there for like 11 years. And then I was with the feeling that I should start something, new again. And I was already, making angel investments and very interested in technology and so on. And that's why I decided to leave that partnership in 2015 to start something in the venture, space. And I started to develop this, the thesis around it. And then, what, should have been my sabbatical year, a week after that, I met with Florian, Mate, and Julio through Patrick, who is our fifth founding partner at the hedge fund. He was my partner at the hedge fund. And then we got together, and I still, recall when I asked, Florian if he believed there would be a space for an early stage fund in LatAm. And he told me that not only he agreed with that, but also that, Mate, Julio, and himself, they were already studying exactly this thesis of, starting something in the venture space. And they were looking for a partner to run, the day-to-day of the fund, raise money, build a team, the processes, and so on. And then, we got together and started, thinking about Canary. And it was a kind of an obvious marriage when we started, because we had Patrick and myself with the investment experience, of knowing how to build an investment management company, and the three other guys, as operators, with the knowledge of, how to build a company, but also passionate about early stage investing. So that's how, everything started.
And Bell, I want to get to you in your story in a second, but just a quick follow-up question for Marcos. Was the leap from, hedge fund investing to early stage investing, what was the biggest challenge that you had to make mentally, because a lot of times when you're investing in public markets, you've got we're very focused on downside risk. And when you're investing in early stage companies, that's probably not something that's top of mind. You're kind of looking for those outlying, companies and big returns. So maybe briefly just reflect a little bit on kind of the mental leap that you had to make going from public markets to private markets.
Yeah, that's probably the main thing is exactly what you just mentioned. This, let's say, the power law mindset instead of, looking at the normal probabilistic, distributions. This is the first thing. And the second, I would say, is, the venture, especially in the early stage, is much more about people than, numbers, because we are basically investing in companies when there are just, two or three, founders with an idea, which is very different from, the hedge fund world where, everyone is talking about, DCF valuations and so on.
So Bell, you've had a different trajectory. You've worked at larger companies dealing with data intelligence, supply chain, investor relations, finance, and then you decided to join Endeavor, right? Which is, I think we met through Endeavor, and you had clearly had a passion for entrepreneurship and supporting entrepreneurs, and now you're a partner at Canary. What made you decide to enter the startup and venture capital world?
Yeah, it's interesting, Brian, but actually startups and VC were not necessarily a non-option for my career when I was in college. So I actually had some light about entrepreneurship when I was doing my exchange program in University of Toronto. I took some entrepreneurship classes, and part of my friends there were or wanted to be founders. So when I came back to Brazil, I had my first building experience when I joined a very, very early stage startup, and I loved it. So I knew that I wanted to stay in that world of building companies, and that's why I went to Endeavor, and we met actually. And my time at Endeavor shed light on the VC industry, at least for me. So when Florian, one of the founding partners of Canary, called me and shared Canary's opportunity, what caught my attention was actually, well, first, partnering with people that I admired and shared values with. And second, I think building the VC industry in LatAm. So the industry was and still is very incipient. I'm sure you know that, Brian. And I saw a lot of opportunities for Canary as an early stage firm to be successful. And I had a sense that with the right people and the right tools, we could actually create a lot of value to founders in the region and have a structured impact in the startup ecosystem. So here I am.
It's incredible to think of the impact that Endeavor has had on on the kind of the startup ecosystem, and kind of because in the early days there wasn't a lot of there wasn't really this community of entrepreneurs, and they kind of went in and helped create that. And it's amazing to think that how many people that actually worked at Endeavor have gone on to like the VC world and become entrepreneurs. And so it's another example of the importance of one company or one organization, and then all these things. People talk about the the Rappi Mafia or other things like that, but Endeavor has quite their own kind of impact in many ways, and I think that you're a product of that experience. Now, you've mentioned before, or excuse me, back it up real quick. Now, going back to the early days here, the venture ecosystem is evolving quite fast. We've seen a huge gains in terms of volume of entrepreneurs, capital that's poured in. But back in 2015, how would you two define the state of the LatAm startup ecosystem back when you were just starting Canary?
Well, there was no unicorns around here, right? So, the first one was in 2018, 99 Texas. And with that, although we had some very, good Series A funds, there was no one writing the first checks on a professional, fashion. We also, we didn't have any organized community of founders or operators in tech, which, by the way, you guys at Latitud are, fostering amazingly well, this community building side. But then, we decided to basically, one of the things that we did back in those days was to bring some of the best practices, around VC to the region here. So we were probably the first ones that to post in our website the term sheet. A very simple one, very friendly. We also decided to get back to the founders very quickly. Even if it was a pass and so on and so forth. So very basic stuff, I would say, in a time that, there were rounds here with 50% of dilution at the seed stage, right? So it was the very innings of that environment, I would say.
As a quick follow-up to that, could you share a little bit more about what was the kind of the main communication that was able to attract LPs? Because if you go to a market and you go out to investors and you're like, there's no unicorns, it's kind of a sign of promise, right? Like, it's like, this is going to happen, but there's no evidence yet. So what was the pitch? And, besides kind of the top line, numbers of like size of the population and everything else, like What were the key things that were you able to get the first LPs over, kind of crossing the line and writing that first check?
It's funny. Actually, there was no, obvious message. We had like 600 meetings to raise the first fund. So it was a, very hard process, I'd say. And the interest rates here in Brazil, at least, they were actually raising. They were in the very similar level than they are today, actually. So it was a very, let's say, odd environment to raise a VC fund. The interest rates were rising. The LPs didn't know about VC as an asset class around here, and there was no other fund, writing first checks, writing checks for ideas. I would say that probably the main message that we, successfully made it through was to let everyone know that we were seeing as very active angel investors. We actually had data about the quality of founders starting something in the region here. So the 5 of us, when we started Canary, we had already more than 100 investments out of our personal accounts as angels. So we knew at least one thing, that the quality of the founders coming into the markets was amazingly better than they used to be. Then the main message was, guys, we're seeing something, happening here, because people that used to work for consulting companies or investment bankers or hedge funds, they're deciding out of the sudden to start something in this region, which is not, far from obvious. So that was probably the main message. So what we were telling, those investors was, if you want to, if you believe that in that, and you think that you can capture part of this value that might be created by those, companies that will be founded here and eventually will be, big companies 10 or 15 years from now, maybe this is the right vehicle to be in.
And you mentioned the quality, of founders and how that's evolved. We're now seeing second time, third time entrepreneurs. And, you mentioned the talent, which is clearly people, leaving their, kind of big company jobs or working at banks and consulting, and then, jumping over to the startup world. And so there's more people with actual operating experience. And then we've obviously evolved in terms of the volume of capital deployed over the years. So what's kind of the missing ingredient in your minds, if you think about what's lacking in Latin America regarding the startup ecosystem?
Well, honestly, I think I'd say we need time to mature as an ecosystem. We do have the foundations, talent, as Marcos and yourself, Brian, just mentioned. We have money, we have opportunities, aka lots of huge problems to solve locally. But we don't have so many successful examples yet. There are not a lot of consolidated tech companies in the region. So we're still creating the next generation of regional big techs. And I think we need time to do that. There are some ways to hack it, but there's a cap into hacking, right? So honestly, I think we need time.
And how do you foresee the following years? Given what we've experienced in the last couple of years, what are the next kind of 2 or 3 years look like in your mind in terms of in comparison with this massive influx of capital? Have you seen the volume of entrepreneurs that are looking for funding decrease? Is it pretty steady? Has it increased? If you were to kind of look at the pipeline of founders over the last, call it 6 months, where we've seen a market difference in kind of in capital, and valuations have taken a hit. What have you seen at Canary in terms of volume of entrepreneurs going out and building new things?
I'll do it, Marcos. Okay. We have seen a decrease in our top of the funnel this year, honestly. Not only the top of the funnel, but quality of founders too. So we have a pipeline of deal flow, and we qualify our leads just like a sales funnel. And we have seen some decrease in volume. But the interesting thing is, Brian, that Canary is still active, and we have maintained our average of investments. If we go back to the early quarters of 2021 and back to 2020, right now, we're still in the same average in terms of new investments. So I would say that there are still quality people, very talented people wanting to take the risk and to solve huge problems in LatAm, not only in Brazil. Canary is already investing in other countries too. We have investments in Mexico, Colombia, Uruguay, Argentina, Chile. So we're pretty active in other countries too, and we're seeing there's still a trend. All the foundations that we mentioned before, they're still there and they're stronger. So people are willing to take risks, willing to build huge businesses. We, as a fund, we're still active, and the opportunities are still there. The opportunities in LatAm are huge. So we're very excited.
And, Canary positions itself as kind of the partner of choice for early stage founders in Brazil. You'd mentioned that you've expanded to other regions, so it's great to see that there's some geographic expansion there. And you've mentioned that oftentimes the firm invests in entrepreneurs who don't even have an idea or a company name. Could you talk a little bit more about Canary's investment thesis and how exactly you go about selecting founders at that stage? You have a mixture of kind of quantitative and qualitative analysis, as far as I know, but maybe you can elaborate a bit on that.
Yes, for sure. We do have a structured analysis process, but it's important to reinforce that there's no guarantee that our process is bulletproof. So we can be, and we probably are, wrong many times. So that's part of the game. But yes, we do invest in teams, not necessarily in ideas or businesses. And we know that business can change the day after we decide to invest. And that's why we have to build conviction that the founders are the right team to partner with, almost regardless of the business itself. So we have 5 years of investment analysis data, and we can predict with a reasonable chance of being assertive the probability of a company raising the next round. And we analyzed around 40 criteria to help us guide our process. And those criteria are the base to source talented people that can become founders in the future. So I'd say we have probably 2 paths to decide when investing. The first one is the standard one. So when we meet teams that are fundraising, and within a couple of weeks, as Canary, we make a decision whether we want to partner with a team or not. And the second path is a longer term one, where we build a relationship with a person before he or she even has a business idea. Personally, I prefer the second path. We're able to actually meet a person and nurture a non-transactional relationship with them. And just to give you, most of those relationships that we start are converted to official partnerships when the time is right. And to give you numbers, in Fund 3, the fund that we are currently investing, 40% of the companies we've invested went through this second path that I mentioned. So something that we are doubling down, basically building relationship very early on.
Yeah, I think it's great that you build a long-term relationship with these founders. And, it's quite early for Canary. I know you're building a firm that, hopefully lasts generations and decades. But if you look at the kind of early signs of, Fund 1 and Fund 2, a sign of success is obviously raising follow-on capital is an indicator that shows. And, I know that you have a handful of companies that have been breakout companies and that look like they're potentially going to be quite large. Is there a metric that you look at as a fund to understand, kind of where you are and how you're tracking in terms of, follow-on capital and the percentage of companies that you've invested in that after 1 to 2 years have received some additional capital? How do you think about that so you can kind of gauge whether you're on track?
It was a very good point. When we started, I was, very concerned about how should we track our operations, and to be, sure if we are executing well, if things were doing well, and so on and so forth. And as you asked, before, this is one difference between the hedge fund world and the VC, because in the hedge fund, every day if you are right or wrong. And here, we're making investments for 10 years. So, we don't know if the funds are performing, exactly as they should. But then what we did was to create some, let's say, KPIs or some metrics that we should be tracking more closely, before we can say that we have a very good track record. Although we are, very, positive and excited about, the current returns of the fund. Although, as you said, we're still in the very early innings. Our oldest fund has 6 years, so we still have almost half of the fund to see that. But then, to your point, the metrics that we are tracking the most here are, one is conversion, which is exactly what you asked. How many companies are raising a subsequent round after our first check? And also the subsequent round of that subsequent round, and so on and so forth. So this is something that we are, tracking very closely, and we have some, let's say, market benchmarks, and we know, what are the, let's say, the expected numbers and how we are in that sense. So just to give you some numbers, we modeled the funds to expecting that 25% of the fund of the companies would raise a subsequent round. So if we are writing a seed check, we're expecting that just 25% of those companies would raise a Series A, and then 50% of those would raise a Series B, and then probably 50% on Series C's, and so on and so forth. Our first fund, almost 60% of the companies raised a subsequent round. So it's way better than, it's actually more than double what we were expecting. So that's why we're excited. And when we are looking at the second vintage, which we raised in 2019, this number is also better than the model. It's closer to 40%, but it's still in the early innings of that specific vintage. So it might get better. But this is one thing that we are tracking very closely, and the other one is what we called here the first look. So, we want to make sure that everything that is happening in the region here, we are seeing first, in terms of funding and, and new companies being formed and so on and so forth. This is also, a very important number, which is currently, above 90%. So, which, makes us very excited about it. And I'd say that probably, those are the two main, things that we are tracking, the most, and then we have some, let's say, operational, metrics like runway of the companies, given this environment, this is very important, and some other, let's say, operational metrics that we are tracking from the companies. But in terms of fund, those are probably the two main things that we are tracking the most.
Yeah, it's a strong indicator. If you the game of VC is that you hopefully, it's called stage financing for a reason, right? You need to make sure that they get to the next stage, and then the company matures. I'm curious to hear, when you look at the the company was the fund was started by you and a handful of other Mate, Florian, Julio, Patrick. So a good portion of them are have started companies before. And when you kind of approach this, what was the discussion that you had internally, that you're like, hey, listen, this is the status quo. This is what we want to make sure that we do differently as a firm. And, how have you instituted kind of those lessons collectively that, the founders have gained as entrepreneurs? Because typically when you go start something, there's a motivation, right? You want to do it somehow different than what exists today or better. So what were the primary things that you felt were lacking when you started, and what have you focused on to make sure that you can kind of close the gap and do something better than what already existed?
Sure. There was something that was quite simple in terms of gaps that we were seeing here. As I mentioned that we were quite active as angels, we in a bunch of times that we were writing angels checks, we used to look at each other and say, there should be a fund, leading that round. someone setting up the terms, setting up the pace, defining, valuations and so on. Brian, as an active angel, you know that, sometimes the founders are raising an angel round or a seed round, and he has a bunch of, interested investors, but no one is actually taking the lead and, and closing, the round and, and defining the terms and so on. So we thought that, we should have this fund. We should, be the ones leading that. And also as founders, as my partners are, they also related to that specific, pain point, because as a founder, you, in those cases where you're trying to close a round with no leader, normally that takes, like 6 months or 10 months to close. So if you are, trying to build a company, it's a pain to have some, to take so long to close a round. So, I recall very vividly, these, days that we were discussing that we should have a fund, or we should, be the ones leading and setting up the terms. But on top of that, I would say that there was a shared, passion to foster entrepreneurship in the region here. That, I can say that this is actually very legit, and it was part of my motivation to be focused on that, and it's also part of my partner's mindset.
I think that you mentioned the angel investors are like corralling a bunch of checks in the beginning. It's very easy for an investor to be like, yeah, let me know when you have a lead and I'll put a check in, because you're significantly de-risked. But the reality is that doesn't really help the founder much. I have seen more angel investors now that are just investing on a safe, and they don't need to wait for a Canary or fill in the blank fund to be leading, which is, I think, very positive. But it is much easier. I think, from my perspective, I've done some angel checks and I've done some alongside you, among other funds. And like, when I know that there's a fund behind it, it obviously significantly de-risks my investment. So, but I do think that someone needs to go out and set the terms and kind of, and put it together. I want to double click on something that, you invest in people. That's something that Canary has said explicitly, not just, not in businesses, but in people. And since you're agnostic as a firm in terms of sectors, how do you go about providing support to each segment? It seems very challenging, given that you make a large, volume of bets. So when founders need in specific sectors, how can you support them in that, given that you're investing in all different types of sectors?
Yeah, it's a great question. And the answer is basically people too, Brian. To scale our access to technical and operational expertise, we actually rely on our network. So we can proudly say that we have hundreds of people very engaged with Canary that are literally one WhatsApp message away, and we enable connections between them and invested companies. We keep track of all the value we deliver to founders, and the bucket, technical support, that's how we call it, is the third most relevant in terms of number of interests that we've done this year. So we heavily rely on our network to help us scale our expertise and our support to invested founders. You're part of our network too. So I've messaged you a lot since the beginning of the fund, so for you to help founders. So you're just one example of a very engaged person in our network. But we're happy to say that we have a large network of very interesting people.
So you have this kind of decentralized support of operators and people. I think it was smart because early on you got a lot of operators to invest, and so when people are when they're bought in, with their wallet, they're bought in emotionally too. So it sounds like that was a key element. But how do you keep that engagement going as your network grows and the volume of investments grows? What is if you were to say the one key thing to keep people engaged into the Canary network, what's the one thing that you think is the driver behind having people come back and wanting to help again?
Well, I've learned that there's no silver bullet, so we don't have one one tool of engagement, but I'd say that the most valuable thing is for us exactly to exchange value. So we ask everyone, what is that you expect with Canary? If the person wants to co-invest with us, we share the deals that we're leading with them. If the person wants to learn from Canary, we make sure that that person will learn from us. So basically, we have to know the person in a deep way and understand what he or she expects from Canary and deliver that. And most of the times, it's a situation that is win-win-win. The person wants something that can be actually valuable to the founder that we are investing in, and consequently to Canary as well. So it's a exchange of value that is literally win-win-win.
And I guess this wouldn't be possible if the ecosystem didn't mature, right? Because
Exactly.
5-10 years ago, it might be more difficult to find people that had expertise, vertical expertise, whether that's in health tech or ed tech. If you can, reach into your network and help a founder out, because there's more of a robust ecosystem now. And let's talk about, besides capital, and some of the support that you'd mentioned with your operator network. Canary focuses a lot on finding talent. It's part of something that you have prioritized. Talk about the impacts of remote work and how that, since the pandemic has that made it harder to attract talent? How have the salaries been impacted, and how has that affected your kind of people ops in terms of supporting your portfolios?
Yeah, great question. And we're very hands-on in terms of talent. Hiring is one of the most painful challenges for startups of all stages, regardless of their size, maturity, funding, and so on and so forth. So we actually have a dedicated team within Canary that focus literally on helping investment companies accessing potential candidates and providing insights and intelligence. So we run an annual survey with invested companies regarding compensation and hiring. And one thing that is very interesting that relates with your question, Brian, is that we have one question that is for the companies to answer. That is the level of difficulty perceived by the founders in terms of hiring different positions. And the level of difficulty of hiring CTOs has increased a lot since 2019 when we started the survey. So this year, Brazil-based companies marked 4.7 out of 5 the difficulty level of hiring a CTO. Colombian companies marked 5 out of 5, and Mexico-based companies marked 3.7 out of 5. But all those three metrics are much higher than the average of the other positions. And one interesting thing is that some Mexican companies that marked 3.7, the level of difficulty, actually pay their CTOs in USD. So it's not necessarily a statistically relevant sample. So I cannot isolate the currency variable and say that paying in reais or in pesos weights in this difficulty level, but it's a fact that geographic barrier to hire are much lower and the work dynamic has changed. So most of the companies, actually 97% of the companies that we interviewed are hybrid or remote first. So most of the companies don't expect to come back to the office to in person fully. So a lot has changed. It's difficult. I don't have a straightforward answer to you, but we're still gathering data on that.
And do you have a team that grabs this data and does the research? Like, how do you as an organization, and is that something that is that primary leverage for PR purposes, or is something that what do you do with the data, and how do you try to help your companies based on what you learned there?
Yeah, we do have a person completely focused on intelligence and insights, how we call it. We actually have a proprietary system that this person developed internally to organize the data and to provide let's say, the visual effects of the data, productize the data, not only for Canary itself, for us, for our support, but also for invested companies. So our main purpose to gather those data is to help companies. We don't do that for PR or anything like that. It's to help invested companies with benchmarks and perspective of the market. Canary is in a privileged position since we invest so early on. We tend to invest in a larger amount of companies. So we have consequently access to more intelligence, and we can provide that intelligence to founders. So that's a main pillar here at the company.
That's great. Wrapping up with a couple more questions. I'm curious if you could walk through to kind of set the expectation of the founders listening, from first contact to close. Obviously, these are very significantly depending on a handful of, things like how hot a deal is, or how experienced a founder is, or if you already had a thesis about the sector. But if you could take us through the kind of inner workings of you find out about a company, they talk to a partner, and then you have a partner meeting. Give us a little bit of the inside, scoop on how that operates within Canary, and what founders can expect in terms of a timeline once they, reach out to Canary.
You want to take this, or myself?
Go ahead. Yeah.
Okay. I know we try to be, very fast, I would say, Brian, because it's, as I said, we can relate with the fact that it's normally very hard to close a round for a founder, and especially when they are in the early stages. With that, what we have done here is we're creating kind of a process that we can give some more power, let's say, to the partner that are actually leading the round, let's say. So what we are doing here is someone brings us new deal. Probably one of the partners will, let's say, lead internally the deal. But the way we see, which is differently from, let's say, the traditional VC model, there is a where normally the traditional model, you have partner leading, which normally discuss the deal in the investment committee, tries to close the deal, and then gets a board seat in the company, and that's normally how it works. Here, we see Canary as a kind of a platform. So the founder is actually negotiating with all of us, but we have internally someone that is actually leading the discussions, basically to make sure that we are, in a timely manner, getting back to the founders, and and making sure that we have kind of a SLA to get back to the founders quickly. And then we have, with the data that we are collecting, this data actually helps us internally to discuss if the deal makes sense in terms of addressable market and quality of the founders, on top of the valuation or the runway that they are looking for in terms of size, of check size. So with that, with this, let's say, data, we can actually decide quickly if it's a, let's say, no-brainer deal, where we can actually close without having to submit that to the investment committee. We can actually discuss over Slack, and then decide and go further and close. And if it's a case of a deal that is, let's say, outside of the guardrails of valuation or size of the market, or if we are not, let's say, totally convinced about the size of the opportunity, let's say, or even if we have found a flag in our reference check process, which runs, let's say, in parallel in this process, we then, can submit to the investment committee and say, what, guys, we need to discuss this in more detail, because either it's a very expensive deal, or we're not 100% with a conviction that it makes sense in terms of business model, or we have found a yellow flag or something around the people involved. So we need to discuss more. We need to have more, let's say, help from the other members of the committee. So that's the way we are set up. And basically to say that, we are trying to to use, firstly, data and also some, processes to make sure that we are getting back to the founders quite quickly. And actually, we are trying to measure our NPS on the passes that we are giving, not only with the companies that we're investing in, but also with the companies that we're not investing, because we want to make sure that the process is actually, flawless and it's working and so on.
Yeah, that's interesting because, it's easy to get founders to like you when you give them money, but getting a founder to like you when you don't give them their money is quite a challenging feat. And so I think that, that would be an amazing process if you can work out NPS based on people that actually apply. So it's a positive experience. I think that's a very smart kind of holistic way of thinking about it. And I have a question about, reference checks, because, part of me questions how effective a reference check is from the standpoint of, like, if you call someone's boss and they worked at a company and they were like difficult, or like they, were, I don't know, contentious somehow, or they weren't easy to manage, like, is that an indicator that they're going to be a bad founder? And how do you, obviously if there's something from like a moral, ethical standpoint, then, that would be a flag that would be a non-negotiable, just because you don't want to invest in a founder that has had some kind of shady background or shady past. But if they're like a difficult person, knowing the personality of founders, so what do you judge and what do you look for when you kind of execute a reference check?
You're going to leave that one to me. Good. Yeah, no, that's a great question, and we're learning, Brian, honestly. But we do rely on our network, people that we trust, to give us candid feedback on a person that we are considering investing. So it's an important part of our process, and every deal that we move forward in our funnel go through reference checks from our network. And it really, we have a process, like we have a guideline and a framework of doing reference checks. So we can guarantee that every one of us that actually is on the front line doing reference checks follow a standard. But the truth is reference checks are not, besides the one that you mentioned, ethical ones, they're not necessarily deal breakers. They're not necessarily a green light or a yellow light. When is a red light? It's a red light, and we respect the reference. But we try to get a deeper look and an holistic look on criteria that are relevant to us. So it's not only about, okay, how is that person leading a team, or is that person difficult or not? We go deeper. We go, okay, is that this person, is she or he like good in building teams? And we search for examples of that specific pillar that is important to us. And I think it's easier for us when we know the person before. When we had time to get to know the person and to build our own conviction. So reference checks are kind of, let's say, features. But again, it's an important part of our process. We're learning how to do it. But for us, it fills some boxes that we cannot fill when we have one or two conversations with the team.
So Canary's announced its third fund, $100 million at the end of last year, and maybe talk a bit about how many startups you've invested in Fund 3 so far, and what's the plan in terms of how fast you'll deploy that capital, and then if you could share any insight onto changes in valuation over the last 6 months compared to 2021. Just talk a little bit more about what you've seen in terms of capital deployed into companies.
Yeah, Brian, we've actually invested, I think, 65 or 70% of the amount dedicated to first investments in Fund 3. So we have runway to go. And the market conditions on valuations, we've seen it changing, not only for seed or pre-seed, but also for Series A's and B's. I would say that we've leveled up our our quality bar in terms of new investments, which was not necessarily driven only by market condition, but also given our pattern recognition and learnings gathered throughout the years. But one of the advices that we usually give founders on situations like the current state of the market is heads down, focus on your core business, organize your operation, and so on and so forth. So that's something that we actually we have done this year. We've carefully looked internally and adjusted our operation in order to be more efficient with our time and be able to juggle the many balls that we have in a more assertive way.
No, and I would just add that, for the seed stage, Brian, the thesis, remains solid. We continue to see, very good people starting, businesses here, basically because of what we, said earlier. We continue to have a region here with, very inefficient, with, with sectors very fragmented, with low tech and so on and so forth. So we continue to see, very good and talented people, with the goal of, tackling those inefficiencies. So that hasn't changed, I would say. And then in terms of valuation, what is interesting to note is that we indeed saw some, let's say, adjustments in valuations even in the seed stage. But the interesting fact is that those adjustments started from the second timers or third time founders. Which I believe, makes sense because those are the founders that actually already, lived through other, crises and understand that, the most important thing is actually to raise the enough amount of money to put their company, running and build a team and so on. And they can, very, very quickly adjust their expectations in terms of, valuation for the first round. And then talking about, let's say, the other rounds like Series A's and B's and so on, what we are seeing here this year is, firstly, those early stage rounds from A's and B's mainly, they are still happening. So we are seeing those rounds happening here. Just within our portfolio, we saw more than, I'd say, 17 or 18 rounds, subsequent of ours that happened already this year within the portfolio. So it's not that, the market stopped. The rounds are happening, but this number, it's like 30% lower than, what it was last year by this, time of the year. And also around 30% lower in terms of volume of, size, check size or round size and so on. So that's what we're seeing. Then when it comes to, Series C's and D's and so on, then we're not seeing so many, so much activity around those later stage rounds.
Can we talk in round numbers in terms of like, you don't have to give me your exact average valuation of seed rounds, but if it's you mentioned 30% lower in the kind of Series A, Series B, are the seed rounds and the pre-seed rounds? Is it like a 10% adjustment? And what's the kind of the typical valuation range that you're seeing, at Canary and in the kind of pre-seed and seed rounds?
Yeah, I can share some numbers. When we started, the first vintage, the average, it's something around $5 or $6 million post money. The seed, rounds that we participated in.
This lower actually, right, Marcos? 3.
No, on average, it was a little bit more than
Oh, okay.
Well, but then, for the second vintage, this number was, closer to $10 million, from 8 to 10. And then, by the end of last year, we were seeing, rounds of around $45 million. But the range, I would say, it was from $10 million to probably on average $25 million of post money. And then now what we're seeing is that this, the numbers are more, they're, I would say, closer to what we were seeing in 2019 and 20. So, ranging from 6, I would say 5 to 12 to $15 million on average.
Okay, so it's pretty significant, the adjustment compared to last year, and but still at a higher mark than 3 years ago. And so when you were saying that the second, third time founders, does that mean that they're going in and just like expecting it to be lower and just accepting it much more kind of easily because they've just been through a cycle before? Talk a little bit more about the psychology of that. I was curious to hear more.
Yeah, it's a guess, right? That's our thesis, but probably, what we think is those, let's say, more seasoned founders, they understand the stage financing, side of the, of this game, which means that they're not, looking for, let's say, optimizing for the highest valuation in the seed round, which, doesn't make any sense. You need to think about the next stages, and you want to have markups in all of your stages, ideally. So if you are, inflating your first round, you're actually putting yourself probably in a, eventually in a valuation trap for the next round, because you need to build up, enough traction to justify, let's say, a 3 or 4 times that first valuation, which is very hard to do that with the first check. So normally it makes sense. It makes more sense to start with a lower valuation and then build, the product and the team, and then start validating in the thesis, and then you raise a new round with some, data and so on and so forth, and continue this, stage financing, idea. So I believe that those, more experienced founders, they understand that, and they want to navigate that in the smoother way, possible, which means, not optimizing for the first, valuation that they are getting.
So it sounds like, you're seeing this adjustment, and there's been a slight kind of pullback in the volume of companies that are being started. But, if we go back to like 3, 4, 5 months ago, there was varying degrees of severity of this kind of, call it recession or call it like slowdown. Now that we're 6 months in, how does your perspective about the current market dynamics differ from 6 months ago when everyone was kind of pontificating on what the future of venture was, and particularly in our region in Latin America?
Sure. The good side of being working in the investment side for so many years is that we saw some other crisis, and we know that the world will not end. And but one thing that I think is worth mentioning here is, differently from the US and other developed regions, LatAm actually did not have any liquidity boom for, let's say, 10 years, which is something that we saw in the US, for example. What we had here was a 6 to 10 months boom during the last semester of last year. So with that, my thesis is that most of the founders around here were not growing at all costs and not paying attention to their economics, because they are not used to they're actually used to navigating extreme and volatile conditions, regarding funding, and that's why what happened, and what we are seeing, looking at our portfolio as a proxy of the market is, a lot of them, have raised money last year, firstly, and secondly, they, in addition to have these healthy, cash balances, they have a clear view of the levers they have, in hand to extend more their runways. So because of this, of the fact of they are living in a region that is very volatile and so on and so forth. So looking at our current portfolio, the vast majority of the companies actually have a runway of more than 15 months on average. The top 25% companies are actually, they have longer runway than that. And some of them are actually reducing growth and even reaching, break even. So what we are seeing, in the current environment is that, on a macro level, I would say that probably, things might get worse before they get better. Because we're still seeing, signs of inflation, outside and so on and so forth. We're not macro investors, but, we love, the subject. But the point is, I believe that, probably it may take longer to, for us to see the funding environment resume, the activity. But, in probably mid of next year or by the end of next year, we're going to see, more checks, being written by global funds. And on top of that, we're seeing more and more interested global investors in the region, which is a very positive sign. Most of those guys, they have, very strong dry powder, balances in their fund. So my point here is, although probably the crisis will, take longer to end, on the other side, we're seeing companies very well run and, with very healthy, runways. But, that said, what probably the news around here will get worse also because the good companies are actually not raising money. So we're not hearing about them. And, the ones that were not able to, let's say, make the adjustments and extend the runway will be the ones raising down rounds now or unwinding their operations. So, probably the news will get, worse, but actually it is a result of us not hearing from the good ones.
Yeah, it makes sense. It's going back to that first statement you had. When you're a public investor, you know if you're winning every day or losing every day. And as a private investor, just to quote Ali from Stonks, guy that came on, he said that funny enough, a lot of times the best performing investors, he said in retail, were actually people that had died because they just didn't touch their investment and it just grew. And that's the temptation when you're a public investor is to kind of pull out. And when you're an early stage investor, you're kind of just in it for the long haul, and you don't feel the ups and the downs like you do in the public markets. So, but I do think that Latin American founders are probably more equipped to deal with the uncertainty, given that it's a region of volatility. And so I think that that's probably a pretty a fair assessment. Well, thank you so much for coming on. Bel, Marcos, it's a pleasure to have you on. Thanks for also being a supporter of Latitude. And, I'm happy to be partners and LP and also have you guys invest in our last round. And so it's a pleasure to work with you. And, it's exciting to see the next generation of companies be built. And I still think it's very early days for LatAm and tech. And so I'm excited to continue to build that with you.
Thank you. No, it was a pleasure, and also an honor to be that close, even closer to you now. So, thanks for inviting us.
Thank you so much,
All right.
Brian.
Thank you. All right.